What is going on, everyone? Hopefully everyone is keeping well. In today's video, we are going to take a look at how to analyze a Forex algorithm's performance, and at the same time, you're going to see the performance of my algorithm on a client's account. So as you can see, this is my FX book, and this is the most famous third-party trading software, basically like a verification software that shows you the analysis of a Forex trading algorithm or people's strategies in general. So what you do is you connect your broker account to it. So as you can see, this client right here, Kai, connected his Black Bull Markets broker to my FX book, and essentially shows the performance of his account. And the beautiful thing about my FX book is it gives you every single detail into an account. But the thing is, even when we send you guys our my FX books, you guys don't know how to really assess and analyze the performance of my FX book. So I'm going to give you a brief explanation of how to do so. So as you can see, first and foremost, the most important thing is to see their balance and their deposits, right? So the deposit is how much money that they've put in, and the balance is how much money is in the account. Now, bearing in mind, this client already took his money out and he's put it into a different broker. So this specific account doesn't have that much data, and it shows a balance of zero because there are actually no funds in it anymore, right? So the next thing that most people also look at is profit. So as you can see, this client has deposited $160,000 and he has made a profit of $28,000, and the gain on that is 34%, right, which is very, very healthy gains. Now, the next thing that I like to take a look at within here is the growth chart right here. Now, this isn't always going to be the most accurate. As you see, there's many pullbacks because they've been making withdrawals. These little dots right here show you how much withdrawals they've been taking. Now, as you can see, there's times where he's withdrawn 40K. This shows that he is moving funds around, and certain times he's taking out profits like 7K, etc. So as you can see, that's what you need to know here. Now, one of the most important things that you want to take a look at right here is drawdown. Drawdown is also pretty important, but I've noticed that sometimes my FX book doesn't calculate drawdown correctly if you move funds from one account to another. So be careful with that. What does drawdown mean? Drawdown essentially means that at one point your account was as a floating P&L of a minus 21%, for example. So on a 100K account, at one point, his account was at a minus of, let's say, for example, 20,000 on a 100K account, right? So this is what drawdown means, and usually will give you a good insight into how risky a strategy is. Now, the best way to usually decrease drawdown is to just decrease your risk, your exposure. So if I wanted to only minimize my drawdown to 10%, all I have to do is just minimize my risk by 50%. Decrease it by half. That way, most likely, I'm also going to decrease my returns. So if I wanted 10% drawdown, then I would have only made half of 34% profit. So everything here I would usually skip. I mean, this shows you just kind of returns on a month, week, and day basis. You don't really need to care about that. Most investors, right, are actually looking at month-to-month basis and year-to-year basis. They're not interested on performance from a weekly and daily perspective. So I usually like to also, like, this stuff really isn't that important. Like, it's you can understand it. This kind of shows you what the average win size is, the average loss is. Funnily enough, the average loss is bigger than the average win, but because we win more trades, our profitability right here, we have a 62% win rate, right? So we won 132 out of 214 trades, and you only lost 82 out of that. Even if your loss is bigger and you're winning more, like, you're still profitable. So this is why a lot of people, they wonder about like win rates and stuff. Win rates don't mean anything. There's traders out there with a 20% win rate and they're still absolutely smoking the markets, right? So I don't really care about these too much. And look, some of these are extremely detailed, and this is more so for people looking to analyze their strategy in depth. Like, for example, you can see that the best performing day for this strategy is usually on a Wednesday. So this can help you in the future, for example, be able to decide, okay, well, most likely if I want the most profits, I can probably just limit my trading to Wednesday, for example. And then I can see that, okay, I'm getting a decent amount of losing days on Thursdays, right? And yeah, so probably Thursdays, I would avoid running the robot. So this is a nice way to analyze and really give you a massive insight into your strategy and what you're using. The other thing that we really like to take a look at is monthly analytics. So he's been running this for 3 months on this specific account. So he ran it from June, July, and August. And he did 3.92% in June, he did 14% in July, and 13% in August, which once again, pretty high returns. And it's kind of why it explains that he has 21% drawdown. If he wants to literally just do half of that, he makes 7% here, he makes about 7% here, then all he has to do is just decrease his risk by 50%. And in that way, he's staying extremely safe. Only 10% of his capital has seen any danger whatsoever. Bearing in mind, drawdown doesn't mean that they've lost it. It just means that their account was at risk at one specific stage, floating profits or floating loss. And this is the same, I mean, with like any investment, right? You can be floating a loss with real estate, you can be floating a loss with stocks, you can be floating a loss with bonds. It's possible to be floating a loss with anything. And this is a good way to determine in general. Right, so as you can see, this is a brief explanation of how to analyze and assess a MyFX book. I mean, there's more information here, such as, like, you can take a look at their general stats, what their broker is. You can check right here that this is a real account. So this right here shows you, verifies that yes, this indeed is a real account, and also shows you that this is a verified track record. So it's not, it's actually verified, right? So it's actually a legit track record. Some of them are fake. Be very careful, right, with some brokers. Some track records unfortunately are fake, so be careful with the broker. Black Bull is a very famous broker, so this is going to be a verified track record. Whereas if you find a random broker you've never ever heard of before, many of the times it's probably going to be fake, so be very careful with that. Other than that though, here is a little snippet of performance on the account. As you can see, this is some very healthy returns, $28,000 on $160,000 investment in 3 months. And once again, this is higher than average returns. Usually we'll be aiming for something a lot lower and also with lower risk. And it's also a good lesson on how to analyze and assess a MyFX book, so that in the future, if we do send you MyFX books and you're taking a look at many of our clients' MyFX books, or you're taking a look at any company or traders' MyFX books, you know how to analyze and assess it correctly. So with that being said, have a nice day, take care, drop a like on the video if you found it useful.